What's going on, guys? Welcome back to the channel. In this video here, we're doing a stock analysis on Microsoft. Loading this up in the stock research tool. We're going to go through three different categories. We're going to go through our company metrics category here, which takes a look at the 5-year average of the company, comparing it to the trailing 12 months. Our second category here are financial valuations, where we score the company out of 10 based off their income statements, balance sheets, as well as cash flow statements. And finally, and last but not least, we will do a price analysis where we will price out what a fair price to pay for this company would be. So with Microsoft, in our company metrics category here, we are seeing a slight decrease in our PE ratio in our trailing 12 months. We're seeing a 26.59 compared to 34.64. So it's good. I'm happy that that number is going down. EPS is up compared to our 5-year average. Our 5-year average has been 4.79. Currently, it's at 9.65, folks. So if you are holding on to this stock right now, folks, you should be very happy that that improvement has been made. Our return on equity is up, sitting at 46.98%. Wow, that's incredibly high. That is incredibly high, and our 5-year average is still a very high number, sitting at 33.65%. So, guys, so far, Microsoft has been killing it. I like that the PE ratio is going down. I like that the EPS is up, and return on equity is also up. Profit margin is also up as well, 37% compared to 27%. This is great to see. Revenue is currently at $192.56 billion. Average free cash flow is $40.6 billion. Currently, we're at $63.65 billion, guys. We pay out a very small dividend at 0.94%, which works out to be $16.5 billion paid out. We can easily cover that with our average free cash flow, no problem. This is a financially strong company. Return on invested capital sitting at 30% compared to 20% on average. Super strong Allman Z-score, but our peer proxy score is somewhat mediocre, sitting at 6. We want to see this number between 7 and 9. But so far, with the company metrics category, Microsoft is doing a lot of things right. They are improving a lot on their 5-year averages, so it's comforting to see that. Now, how does this stack up with our financial valuations? So with our financial valuations category here, folks, on my software, we're grading this company a 9 out of 10. That's taking a look at their income statements, their balance sheets, as well as their cash flow statements to get that number. What are they doing right? Well, a whole lot. What are they not doing right? Their PE ratio on the 5-year average. But as we discussed, that number has been going down. We're currently at 26.59, but their average is at 34.64. We want companies that are sitting below 22.5, folks. That's the magic number that we're looking for. But other than that, let's go through all the positives, because here's the thing, folks. You can find a great company and the PE ratio might be a little bit high, but it could be justified if it's able to keep up that growth. So with Microsoft, it may just be one of those companies. But taking a look at everything else that they're offering, it's hard to disagree with that, right? We have a current ratio sitting at 1.99, pretty much 2. That means they have enough assets on hand to cover their liabilities, no problem. High return on equity, amazing EPS growth, a low debt to equity. We want this number to be underneath 50%, folks, and we have that. It is currently sitting at 42%. That is amazing to see. They are buying back shares. Even though it's a slight buyback, they're still decreasing the amount of shares outstanding, so you as a shareholder own more of this company. The net income is growing. The free cash flow is growing. The return on invested capital is over 10%. The revenue is growing at 14.66% over the last 5 years. This, folks, is a solid business. Our 52-week range, we were sitting at 349. On the high side, we are now sitting at 257. So when I see a company that's been going down in price, as we can currently see here, folks, right? It's been going down in price. And with strong fundamentals, strong financial statements, I get excited because now I can price it out and see what's a great price to buy this company at. And that's what we're going to do, folks. We're going to load this up in our price analysis section, and we're going to figure out what a great price to pay for Microsoft would be. And if you're enjoying the video so far, folks, make sure you hit that like button and the subscribe button. I'm going to fill out these boxes. We're going to do a 10-year analysis and price it out. So stay tuned. So if you're new to the channel, what I like to do is I do a 10-year analysis on the business, and I try to stay as conservative as possible. I go based off the numbers that they provided. So with Microsoft, I stuck in the range of their 10-year and 5-year numbers. So I did 10, 12, and 14% revenue growth. Profit margin, I kept it somewhat the same of numbers that I know they could potentially hit by going 24, 24.5, and 25. Same thing with free cash flow margin, using numbers that I know that they can hit. So 30, 31, 31.5, because I don't believe that that number should change. As well as our price to free cash flow, I gave it a slight discount by going 14, 16, and 18, keeping that below 20. That's what we want to try to do. As well as our PE ratio sitting at 14, 16, and 18, just to give ourselves somewhat of a discount. Our desired return, I do lucky number 13. I'm going to click calculate, and we're going to find out what a fair price to pay for this business will be. This software that I have in front of me will be available to you. We're just scratching the surface here. This is the stock spec page, but we have a lot of other options and a lot of other features. We have income statements, balance sheets, as well as cash flow statements, as well as more features are going to be integrated along the way. So with Microsoft, our current price is $257. Our average calculations comes out to $235.74 with our revenue growth. If you believe the aggressive category here at 14% revenue growth over the next 10 years and an 18 PE ratio, it is a buy. Sitting at 307 as our average calculation, 294 on our DCF, price of free cash flow calculation, 345. So it's looking pretty good. However, I like to try to buy in our conservative and moderate range, somewhere in between here, because that gives me the most margin of safety. Ideally, if it's below this 235 number, that would mean it would indicate a buy for me at least. And our 52-week range, we almost got that. We almost got there. We got to 241.5. What does that mean? I think Microsoft is a phenomenal business, and it's hard to disagree with that based off of what they've been doing over the last 5 years. And we can see that here in the financial valuations category, as I said, as well as where they currently stand to their 5-year averages. Profit margins are increasing, return on equity has been increasing. They are on a hot streak. So what does that mean? Well, right now, for me personally, I'm waiting for this price to come down. I would love to own this business. I think the company's phenomenal, but the price just doesn't make sense for me right at this moment. But folks, as always, you have to do your own due diligence. This software here allows me to quickly look at companies, and I'm trying to get this software out to you guys as quickly as I can. It helps you take a look at everything quick and concise. Here's our other options that we have on the software, just different. We have charts that we can take a look at, and there's more features, as I said, being integrated. So stay tuned for this, folks. It's coming out quicker than you think, as well as there's news and everything is on this page. This is like the go-to page, the stock specs page, and it shows you everything that you need to know about the business, where it's standing in the news, how it could be analyzed from a price section, the metrics, the financial evaluations, lots of things that could be integrated. So folks, that's the video. Microsoft, I believe it's a phenomenal business. It's just a little bit mispriced. It's a little bit overvalued. I'm waiting for that price to come down, and then I will act, because this is a business that I would love to own, but I will only own it for the right price. If you want to see a company evaluated, write it down in the comment section below. I read all the comments, as well as stay tuned, because once the software drops, you will be the first to know. So make sure you hit that like button, subscribe button, and I'll catch you in the next one.